What's up traders, welcome to Failure to Displace. In this video we're going to take a look at the New York AM session on EURUSD, following on directly from our continuation trade in London session through to this next video where we've had a textbook reversal entry back into the London range. Let's jump into the analysis now and see how this presented itself. And if you go back to watch the previous video, you'll see a great example of how these two setups played out in today's trading sessions. We're starting our analysis off on the 15-minute time frame. We're going to take our fib from the low, put in on this swing low here, up to the current high of the week. And what we're looking for is discount for any potential longs. So you can see we've come down in the London session, entered a discount, just tapped the top of optimal trade entry, not quite filled the full fair value gap yet, and have started pulling back prior to our London session starting at 8 AM. We've had bearish price action coming here, but we are at a key level now, optimal trade entry, looking for potential reversal here back into the range. So we're going to use our session liquidity tracker plugin. Links to all of the plugins that I use are down below. This is going to show us untapped levels of session liquidity, given the London low specifically is the main one that I'm looking for. So if we sweep London low, we're coming back into optimal trade entry, taking a untapped level of session liquidity, at which point we can look for a potential reversal trade. So we've tapped optimal trade entry once, we've pulled back, we're now displacing back towards that level. So we're engineering some liquidity just above, so this is a good sign. When we see equal highs, equal lows being put in just beyond a level of liquidity, this is engineering liquidity ready for a sweep into that level. So I'm going to drop to the 1 minute now. And just watch for price action. This is a telltale sign for me if we are engineering liquidity above another higher time frame session level of liquidity. It's a sign that we may get a strong sweep in and then a reversal. Price aggressively comes down 9.30, so this is the New York Stock Exchange open. We can often see an injection of volume here. We sweep London low. We are looking for now our unicorn potential reversal pattern. These last two up-closed candles, they led to a swing high and then a lower low. So currently these should act as an order block. So these would be resistance for further downside. If we start seeing PD arrays failing, so this can be bearish fair value gaps getting closed through and this order block being closed through, this can show us that potentially we are now into a buy program. So that's what I'm monitoring for now. We've had a sweep of relative equal lows and a sweep of session liquidity into optimal trade entry of a much larger range. We'll see how price is going to react. So we've put in another high and another low. Therefore our order block is going to move slightly lower. These three up close candles created a high, created a lower low. So these are our last order block now. Again, we're looking for PD arrays to begin failing. So we've got a bearish fair value gap here inside our order block. Strong, aggressive move. So we've failed to hold price down with this bearish fair value gap. This can now be converted to an inversion fair value gap. So this resistance could potentially flip to support. We've closed through this order block. So this order block is now a breaker block. That would have been resistance. It can now flip to support. We pulled back into the London range with displacement. So this is a much larger candle than any of the candles around it. So this is showing a strong buy back into the range. Large bullish fair value gap. So where we have a bearish fair value gap overlapped by a bullish fair value gap, this can be upgraded to a balanced price range now. So this is our unicorn entry. We have a order block that has turned into a breaker, so that has failed. We've closed through a bearish fair value gap. We have left an overlapping bullish fair value gap, creating a balanced price range. 9.39, so we're coming up to the open of a new 15-minute candle. Entry is going to be within 3 minutes of a 15-minute candle open, so anywhere from 9.42 which is this point here. Stop loss will be below the low, so we are allowing for the breaker block, this large order block. These new 2 down close candles are an order block, the balanced price range, and a fair value gap. So there's our 3 PD arrays at least to act as support for the trade idea. Entry at the top of the breaker block. And then as a target, we've got relative equal highs here for a first take profit 1. This is going to be just over 1R, so we'll take 50% of the trade off at this point at 1.2. This will make us risk-free, so we'll close 50% of the trade, which means if we do pull back and get stopped out, this 50% profit will cancel the 50% loss, so we will be risk-free after this point. And then we need to decide where we're going to hold this to. Logical hold will be the current New York high. However, if this is a reversal back into the London range, it would be worth pulling the fib from the London high to the London low. So essentially what we've done is we've failed to displace below the London low. We've pulled aggressively back into the range. The full target will be to retrace the full London range, so going for the London highs. However, safe targets will be into a premium and optimal trade entry. So we'll do a take profit 1 at this point, take profit 2. We'll be taking the buy side liquidity at the session high and then into a premium, so closing 50% here. We're closing out, sorry, at the 50% of the range, which would bag us 4.74R. Tapped in perfectly, just at the top of the BPR, so we've not quite tapped the BPR, but we are into the 50% of that fair value gap. Get some consolidation. We're into the new 15-minute candle now. We were entered 3 minutes prior to the candle starting, which is fine for my additional confluence on the 15-minute cycle. Price pulls away, so after a little bit of consolidation, we eventually pull away to take TP1, so that's 50% of the trade closed. And we're now going to hold the rest, looking for the premium area of our London range, where we'll offload this trade for 4.7R profit. So you can see good strong bullish candles here showing us a buy program is in play. Again, really strong displacement. So we are now into the silver bullet hour, 10 AM, and then we get our displacement towards a liquidity level, which will probably be the buy side liquidity at the high of the current session. Taking the high of the session, we're holding out. Smart money will be looking to sell once we get into a premium, so I'm going to hold out this till we get into that premium area, which we eventually do. Sorry, I scrolled forward a bit too fast, but we eventually bagged that premium area and we are now consolidating outside of the trading window at 11 AM. So really textbook 4.7R profit on that. Fantastic entry on the unicorn model after sweeping London low into optimal trade entry of that higher time frame range that we highlighted from Friday. So I hope that analysis was useful. It's a really nice follow on looking at the continuation that we were looking for in the London session, moving through to New York where we could anticipate the reversal because we were at the optimal trade entry and we had that textbook displacement through the breaker block, leaving us a perfect unicorn entry. If you found the video useful, please leave it a thumbs up. If you've got any comments or questions, leave them down in the comments section below. And if you're enjoying the content, then consider subscribing. Dropping videos like this every day. It would be great to have you on board. Thanks for watching. I'll see you again in the next video.